Much has been said about what investors should know about investing. For new beginners or newbies in investing, when you invest, there are a lot of things to consider, and there are huge things of information that you should know. Of course, when you invest, first is know when to invest. When you invest, you should know what aspect of your personal finances do you consider to invest, and that is knowing your risk tolerance. And definitely, when you invest, make sure that you invest what you can tolerate or what you are willing to lose, because this will determine what and how big you are willing to invest in a particular investment that you prefer. Of course, when it comes to investment, there are risks that are also associated with it. And as a investor or a future investor, you should also know how to manage this risk in your investment. And for us to know or for us to manage that, of course, how to manage a risk is that one, to avoid this risk in investment is making sure that we are being updated. We should know what are the latest news, what are the latest trend. That way, we could make sure that our decisions are effective when it comes in our investment. That is also helping ourselves. Being updated is letting our investment grow and not failing it. This would determine how our decision making would also do if we also keep ourselves updated. And of course, in managing risk, it is also better for us, especially so for new beginners, to check on or invest on blue chips. When you say invest on blue chip, this is check making sure that you are investing with a company that is already established. It has a good finance. Okay. So when it comes to blue chips, it is investment in a stock corporation with a national reputation for quality and uh, reliability, and of course the ability to operate profitability in good and bad times. So that is also one way on how to manage your risk, especially so for beginners or newbies. It's really good for us to invest first in blue chips. That way we could avoid to lose our investment, and also to manage the risk in investment. One thing that struck us when doing the interview was timing is really the key in investment. Okay, so why timing is really the key in investment? As mentioned, when D2 was already announced by President Duterte to be the third telecom, D2 has really a high price stock, and its stock price really went high. But since the people did not accommodate the third telecom, of course, its stock price went down drastically. So timing is really the key, because when you invest, when the price tag of D2 was like 2 pesos, and then sell it when it had its highest peak, then you had a good investment. But when you buy the stock of D2 when it has the highest peak and now going down to probably 50 cents, then it's a bad investment. So that is one thing that we really learned with our the two experts. Okay, timing is really one factor for us to manage this risk in investment. It's not only investing in blue chips, but of course, having a diversified investment could also manage this risk in investment. As said by Sir Carl, when you invest for the future. And one thing that I got is that getting a health insurance because you don't invest for your future health, right? So when you invest, if you have insurance, your insurance would cover in case you will be hospitalized, right? So when you invest, you should also know how to diversify. Having a diversified investment would help you also to manage this risk in investment. These are also the tips and insights that we have learned with our experts. When you invest your idle cash. It's something that you will not use in emergency cases. Thus, remember the 50-30 rule. This 50-30 rule is that 50% of your salary is for your essential needs. For the 30%, it would be for your wants, and the 20% is to pay your debt or setting aside funds in case of emergency. And that is something that is idle, which you're also willing to invest. And also know your risk profile. This is your risk tolerance. And also said, diversify your investment and keep on investing. So just in case your first investment fail, then you do have a backup. So that is also one way on how to manage the risk in investment. We also have asked our traders or investors if how could be socially responsible or what is a socially responsible investing. What strike is that this is actually the gray area when it comes to investment. All right, so this would end our hindsight, insight, and future sight. Hope you have enjoyed and have a blessed day ahead.